Hello and welcome to episode 19 of the Gold Goats and Guns podcast. My name is Tom Luongo. It is the 4th of July, 2017. Happy birthday, America. Don't screw it up. All right, let's get right to it, shall we? I don't know about you, but I'm gonna finish this podcast and then pretty much take the rest of the day off. I haven't had much of a day off, many days off recently, so I really kind of need a good, solid mental health day to hang out with the friends and do something nearly mindless. So I hope you all have a great day and drink beer, watch fireworks, hang out with the family, do all the things in this life that politics should not touch. Right? All right, let's get right to it then. So bullet point number 1, let's talk about Qatar. So the Saudis started on this path of trying to subjugate Qatar, who, as I've described in previous episodes, is attempting to forge its own path independent of the Gulf Cooperation Council, the rest of the Arab oil states. And the Saudis aren't happy about this. Specifically, Crown Prince Mohammed bin Salman is very unhappy about this. And over this past month has, we know that diplomatic relations between Saudi Arabia, Bahrain, the UAE, and one other have been suspended. And that the rest of the GCC is trying to mediate here, Kuwait, Oman, are trying to mediate between the two of them. But this is not one of those standoffs that's going to be ended through this kind of negotiation. This is one country under existential threat trying to put another country under existential threat and bully them into supporting their long-term gains, their long-term goals. Because if Qatar doesn't support Saudi Arabia's standing within the GCC and the Arab world is going to continue to deteriorate, just like their budget deficit and their hold on political power and. So this is the House of Saud, honestly, under existential threat, lashing out like a cornered bully, which is what it is. So last week, the Saudis issued a 13-point ridiculous over-the-top list of demands that Qatar must comply with as of yesterday, or I guess they'll wag their finger at them really sternly. Because when the deadline came yesterday, the Saudis gave them another 48 hours. So now, what's one of the things about bluffing? It's one of the things about issuing demands. It's one of the things about threatening. Right? So it's kind of the first thing you learn as a parent dealing with a toddler is that you don't threaten without consequences, without going through with them. Because if you don't go through with them, then they'll know you're not serious. So you have to follow through. And this is where bin Salman has really put himself in a bad situation. This is why he won't end the disastrous war in Yemen. This is why it took Donald Trump going and reading the Riot Act to the Arabs and saying, look, if you don't cut this out, the United States is going to stop having your back. Which is, frankly, at a certain level, if that's all Trump accomplishes in his first 4 years as president, that's pretty impressive. But he's going to accomplish a lot more than that, both good and bad. So, the bin Salman's not going to change course, or at least he certainly wasn't going to change course, because when he thought that Trump, in saying that, also meant, and you can do whatever you need to do to shore up your kingdom. That is not what Donald Trump said, because right after the closing of the ending of diplomatic relations between these countries on June 5th, we saw very confused rhetoric coming out of the Trump administration. And we haven't heard much, if anything, from Trump since his initial reaction. And I read a great article over at the American Conservative given to me by one of my Periscope followers, who, big shout out to them for finding that for me, because ACOM Mag is not something I read on a regular basis. And it detailed the possibility that what's happening here is that Jared Kushner is feeding Trump his Mideast talking points through the foreign minister of the UAE. And if that's the case, and that has Tillerson, Secretary of State Rex Tillerson, and Secretary of Defense James Mattis crazy angry. You notice that everything that's happened since then has been really weird, right? Because immediately Qatar turns around and pledges to buy $12 billion worth of aircraft in the United States. Either F-18s or F-16s from the United States. They've offered to buy 10% of failing American airlines. All these things, right, that they're trying to do in order to forge an independent path, in order to keep everybody happy. Because remember, Qatar is the one that bought a 20% stake in Rosneft early in the year, right? Them, a consortium between them, their sovereign wealth fund, and some Swiss investors bought 20% stake in Rosneft. And at the same time, they're cultivating friendships with Turkey and, by proxy, Russia. And then eventually it's going to be, with their sights on Iran. And this is, of course, a bridge too far for the Saudis. So looking at this situation, it's never a good idea to bluff and not be and threaten and not be able to back it up. Because once your bluff is called and once your threat is called, what are you going to do then? You have to keep going. And so what's going to happen tomorrow, right? Is bin Salman going to double down and try and force the rest of the Arab countries to shut Qatar out of their banking system, to shut all the ports, to continue to shut all the ports and everything else, with the idea of effectively shutting them out of international banking, right? And you can't run, the world's most lucrative liquefied natural gas operation in the world without access to banks. You just can't do it, right? So, and that's what's coming. And whether bin Salman doubles down on that or not, and whether or not Trump backs his play, is ultimately going to be the interesting part about it. I've got an article up on Russia Insider right now which goes through this, which at the end of the day, you have to think of it in these terms. What's the end game for bin Salman's threat to Qatar? Cutting them out of the SWIFT system, which is the international electronic payment system, which is what we did to Iran in 2012. What we threatened to do to the Swiss in 2010, and they caved. And then we did to Iran in 2012, and they eventually figured out ways around it. Look at who Qatar's allies are at this point. Their biggest trading partner is China. Qatar has their currency pegged to the U.S. dollar. If that happens, the big question is will bin Salman try and push for kicking Qatar out of the SWIFT system? Well, he's going to get Trump on his side about that one. Do you think that's going to happen? We didn't even do that against Russia when we were trying to overthrow the regime in 2015, because we knew that it was a threat that had no real teeth with the Russians. We didn't have to go that far in order to try and destroy the Russian economy. And still it didn't work anyway, because the Chinese have their own version of SWIFT, and now the Russians have the same thing. And so those two systems can easily be interfaced together. It's just a protocol. It's not hard, right? It's not that difficult to set up at the end of the day. SWIFT is a very, very vulnerable weapon. It's a powerful weapon, but it's very vulnerable. And the more you use it, the less powerful it becomes. And so I don't see that coming into play here. I don't see the U.S. doing this at this point because, frankly, Qatar has been an important ally for the U.S. in this region in order for us to do our business. Remember, there's CENTCOM is in Qatar and coordinating all of our military efforts around the region, all the way out to Afghanistan and Syria and everywhere else. What's the end game here, right? So I think that at the end of the day, the Saudis are going to continue to step in it, and that the blowback on this could be catastrophic in the long run. So we'll have to see what happens. But this whole thing could wind up blowing up the GCC, and then the whole idea of Trump's kind of NATO for the Arab world could fall apart because of this, spoiled brat who's now currently running Saudi Arabia. Speaking of Trump, okay, let's move on to the next thing. So speaking of Trump, and what's important is to understand that we're coming up on the G20 meeting on over the weekend. I'm going to do another one of these before the end of the week. I will not be another week before I do another podcast. But I wanted to touch on this as we get there. So Friday he's going to be at the 3 Seas Summit, which is a convocation of the 12 leaders of the Eastern European countries. So basically everybody like east of Austria. So Poland, Hungary, Czechoslovakia, the Czech Republic, sorry, the Czech Republic, Slovakia, Slovenia, Macedonia, Albania, all of those countries, Croatia. The big four being the Visegrad Four, the Slovakia, the Czech Republic, Poland, and Hungary. And Trump is going to visit there before he goes to the G20, and it's going to be very important to see what he does. I see a number of reports, but nothing that's come from Trump himself about how he's going to back Poland's play to stop the Nordstream pipeline. And we have the sanctions bill that's going through Congress right now, which is absolutely aimed like a laser missile, like a laser-guided missile to Russia's energy ambitions in Europe. And it'll be interesting to see what Trump does. If he focuses on immigration in his statement, any statements that he makes, and prefers Hungary's Viktor Orban to Poland's Duda, then it will be then that will be one signal that we can go into the Trump-Putin meeting at the G20 with greater opportunity for some kind of détente to start being built between Russia and the United States. If he comes out crowing about U.S. LNG exports to Poland and the Baltics, well, that's absolutely a massive signal that Trump is actually on board with all of this Russia baiting that's been going on in the last Russia and Iran baiting that's been going on in the last couple of months. I think that at a certain level he is trying to. I think Kissinger's got his ear to the point where he's trying to present Russia with choosing between two bad options in order to keep one. Like, choose between Ukraine and Syria. You want U.S. bases in northern Syria, and we'll back off in Ukraine, and the Donbass can be reunited with Russia, or you're going to give up the Donbass in order to not have missile bases in northern Syria. I think that's the kind of, and it's the same thing, and the same thing with the pipelines. You can choose between Turkstream or Nordstream, but we'll fight you on all of it to the end, or we can cut a deal right now that you can have one versus the other. Putin's going to laugh at that, and he's just going to walk away. I'm telling you, he's just going to walk away because he's been fighting for all of these things the entire time. Billions of dollars have already been signed, contracts have already been signed, billions of dollars of potential revenue are already there. This is not something that he's just going to walk away from. And this is not going to be some silly art of the deal, quid pro quo thing. And frankly, Kissinger's divide and conquer strategy, this kind of thing, is it's really childish, and it's very 20th century. You're dealing with a much different Russia than you were in the 1970s, and I think that this is pretty obvious at this point. So Russia's not without friends, right? And this is why Jinping stopped in Moscow before the G20 to sign a bunch of trade deals, reaffirm Russian-Chinese relations, and everything else. This is very important stuff. Okay? And that brings me to Turkey. And last week I wrote an article for Russia Insider explaining what happened in the Kurdish canton north of Aleppo, how that attack was a real, honest to God, between your bishop and your rook moment for Donald Trump from Vladimir Putin. Very subtle, behind the scenes. You shoot down the Syrian army's Su-22. You declare red lines and deconfliction zones that we did not agree to. You continue to do all these things, and you continue to act like Rambo without a jockstrap. Here you go. We're going to start bombing the Kurds to the west, to the northwest, to undercut your relationship with either. So you can choose now between keeping Turkey in NATO or your alliance with the SDF with the SDF Kurds and take out Raqqa. Your choice. Have a nice day. That's a real choice. Because you see, trying to get Putin to choose between Nord Stream or Turkstream, you got to remember that he's already alienated Angela Merkel. Now, Merkel's just going to turn around and unilaterally just tell the United States to go scratch on this one. I think she's ready to do so. And she's in the middle of a re-election campaign where the optics of her not looking like an American stooge, which has always been an issue for her with the German electorate. This is a big campaign point for her. So the G20 is going to be a hot time in the old town simply because Putin will actually be there and Trump will be there. And as opposed to, the boring convocation of philosopher kings getting together and deciding for the world how they're going to screw us all over and turn this into feudal serfs, it's actually going to be a much more interesting affair than it normally is. All right, and then before we get to the charts, I just want to bring up a point that hit me over the weekend. I was talking to a friend of mine, and he said, it always seems like Q4 and Q2 closes are always so much more important than Q1 and Q3. Right? The markets do weird things around the end of the quarter, but they do really weird things at the end of Q2, and they do incredibly weird things at the end of Q4. Obviously, there's half-year position squaring and end of the year and whatnot, and end of the year position squaring obviously in Q4 for tax purposes and whatnot. So Q4 makes sense, but Q2 is a little weird, and it's always about geopolitics that it gets weird, and it's actually about today. If you want to move markets as a regulator, as a central bank, if you want to get the most bang for your manipulation buck, you do it when the United States markets are closed. You do it over Thanksgiving, you do it over Christmas, you do it over the 4th of July, especially when the 4th of July lands on a Monday or a Tuesday. Certainly, Tuesday is an optimal time because Monday is a nothing trading day. And then the markets, because everybody's looking ahead to the holiday on Tuesday. So it's almost a 3-day trading week when it's like this. So what a shock that last week we saw markets get incredibly overstretched to the upside. The euro went to over $1, closed at over $1.14. Oil went on an 8-day straight tear to the upside, even though the supply and demand fundamentals for oil are ridiculously bad. The dollar got trashed and nearly threw a 2-bar quarterly reversal. I mean, there's all sorts of stuff. It was so obvious that they were trying to push a narrative incredibly far. And we had all the central bankers got together and talk. So, you schedule a massive central banker conference where Carney at the BOE and Kuroda at the BOJ and Drahi at the ECB and Yellen and multiple Fed governors. And they're all speaking, and the guy and the Polaz from Canada. They're all talking. They're all telling you what you want to hear in order to move markets as far as possible and get offside as much as possible. And here we are today. The markets are closed, and from the moment Q3 started, the euro's been under attack. The euro's given back nearly a penny in 2 thin trading days. And if you don't think that that's going to continue, you're crazy. Now, I mean, we may get a blow off move up to about $1.16 on the euro. That's possible, but forget that. And I think the key here, and I have this in an article that I wrote for Seeking Alpha on Friday, talking about this, have we found a bottom in the dollar, is the 2-10 spread, right? The spread between the 2-year and the 10-year Treasury bond. And the 2-10 spread was collapsing all year long, and everybody was like, oh my God, we're going to get a yield curve inversion. The Fed is raising interest rates into a recession and blah, 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 blah. And everybody was coming out of the woodwork going, oh my God, we're going to have this. It's going to be apocalyptic in the bond market. I'm like, no, it's not. No, it's not. There's $10 trillion worth of dollar-denominated foreign corporate debt out there, and it continues to rise, even with the friggin' Fed raising interest rates. The latest numbers out of the BIS are insane. What everybody's worried about, what they're trying to do is push the dollar down as low as possible because they're absolutely terrified of the resumption of the dollar bull market, which will bankrupt everybody. And canary in your coal mine is gold. Gold is a mess. Look at this. Gold, while the dollar was getting trashed for they were going through one of the worst periods we've seen. Gold was getting trashed along with it. Silver, just as badly. Okay, and this is your big tell, right? We're selling gold. Eventually, people finally got the hint that the Fed is serious about raising rates. It does not matter what you think is happening in the macroeconomic numbers. The macroeconomic numbers are all garbage anyway. And everybody knows it. The Fed told them, we're not using macroeconomic indicators to decide what we're going to do with monetary policy. We think there's an asset bubble in stocks. We're going to continue raising interest rates. The balance sheet needs to be normalized. The Fed is feeding a deflationary environment. We are in a deflationary environment. If we weren't in a deflationary environment, gold's chart wouldn't look like this. Silver's chart wouldn't look like this. If I showed you the oil chart, certainly the monthly chart, you would see what I'm talking about. These are deflationary effects. So this idea that the dollar is going to, the USDX is going to drop into the 80s or something is complete nonsense. I mean, if it does, it's going to be the biggest spike bottom of all time, and I want you to buy anything that drops alongside the dollar. But the key here is that the day the Fed raised interest rates in June, the 2-10 spread bottomed at like 0.792% or 79.2 basis points. And then it double bottomed at that same level about 4 days later. And then since then, it's been rising. And then with the discussion the other day by one of the Fed chairs who said that, I think we're calculating inflation wrong. All of a sudden, everybody realized the Fed was serious about this, and the 2-10 spread started widening out tremendously. Yellen came out and said, we're covered. There's never going to be another financial crisis. The banks all reported, the banks all passed their stress tests. And so now it's time to go bullish on the banks because, the 2-10 spread's widening. And that's good for, widening 2-10 spread is better for lenders, and a flattening one is better for borrowers. We're back to nearly 1% on the 2-10. Okay. This is what's happening. So gold is very vulnerable here. I think this is an exaggerated move down looking at the weekly chart and whatnot, but I still think there's plenty of room to the downside. I just don't think that I think we're going to get some kind of spike bottom. Maybe it might have been yesterday. Remember, thin markets, look, everybody's going home early and they bombed gold $25, and now we're up about $6 or $8 this morning. Very possible that we'll get a rally into the end of the week, or this will be our spike bottom, and then we'll get a rally into the rest of July. But if we don't break 1,300 in July to the upside, then gold is most likely telling us that we're in for a much bigger bout of dollar illiquidity as we move later into Q3. And silver's telling us exactly the same thing. Silver's on the verge of an unbelievable breakdown. I think that we're going to get pretty much a bottom here in silver. I could be wrong, but it looks like we're going to get a trend change in the short term, just because we've got a 5-week downtrend in silver, and that's like a 92% probability of a break back to the upside. But that doesn't mean that we're going to break $18 and be off to the races. No, I'm more thinking that we're going to correct back to around $17 and then fall off the wagon again. That's what I think is happening. Okay. As the dollar starts to strengthen, and everybody starts to realize that, oh my God, the euro should not be trading at $1.14. But there was a little bit of panic buying in the euro, where they closed a bunch of banks. There was a scramble for euro dollar liquidity. Okay, fine. That's over now. There's maybe some manipulation of the markets to square the numbers at the end of the quarter, because that happens a lot. And we never get we only get the once weekly update of how money moves in and out of the reverse repo window and out of excess reserves. And we only get a snapshot of that as the close of Wednesday. And interestingly enough, that the biggest moves in the dollar were on Thursday and Friday. Expect a normalization of those numbers by the end of tomorrow, if that's what happens. Not saying that any of this quote-unquote manipulation or anything else is changing trends, because it's not. These are the trends. They can just exacerbate those trends one direction or the other. Okay? And then the last thing I want to talk about this morning is, because we need to look at Bitcoin. So interestingly enough, we finally had a sincere correction in Bitcoin. A good, solid 3-week downtrend. This is great. This is brilliant. Now look at this week. Since Sunday night, because remember, Bitcoin trades 24/7. So, these numbers are, these open high-low closes for something that for an exchange that never closes is a bit arbitrary, but it's a way of getting an idea of what's happening in the market. And we had a huge bounce earlier last week, and then we closed reasonably, and then Bitcoin just took off from there. And it's just barely. It's hard to see on the chart, and I didn't mark it, but we did get a break to the upside this week already, and it's just Tuesday, so you've got 5 more days of trading to see if it can extend this move higher, and it most likely will. And obviously, if it does, your next target is right here at around 2750, and then 3 or 4, and then a break of 3,000, and Bitcoin's going to 4. We're also seeing bottoming in Ethereum, Steam, Monero, Litecoin. Litecoin's already broken it back out to $46. Litecoin's on fire because Bitcoin is actually still under real pressure from the scaling issues, right? And it just happens to have the most infrastructure, and it's the easiest way for investors to get involved in cryptocurrency, and that's why it's still getting tremendous input, tremendous capital inflow. But the people who are veterans to this market are now moving out of Bitcoin and seeing the arbitrage opportunities and these other coins, these other crypto coins and tokens that are massively undervalued. And that's so we're seeing asset rotation. It's the same thing as what happens in the gold and silver market, right? When gold gets too expensive and the gold to silver ratio breaks above 75 or 80 or some stupid shit like that, guess what happens? Everybody goes, gold's too expensive. Let's buy silver. At that point, that's when they're buying it for the same reasons. They're not buying silver because they think jewelry demand is going to go up, right? They're not thinking about silver or for making keyboards and contact points in cell phones and solder points in cell phones. They're talking about they're buying it for monetary purposes. They're not buying it for industrial purposes. This is the thing about silver, and that's why the silver to gold ratio stretches and contracts like it does. And it's a great way to decide how you're going to spend your money when you go to make your monthly buy. Like I know you are. Everybody who's listening to my voice knows that you should be making your monthly buy of gold or physical gold or silver and sticking it someplace safe. And if you're doing that, if the silver to gold ratio is high at the end of the month or whenever it is you should buy or you make your buy, then you buy silver, and if it's low, you buy gold. It's the best way to go about it and get the most value for your money over the long run. It really is. Just use the ratio to your advantage. So, and it's the same thing that's happening in the cryptocurrencies. You guys are moving in and out of Bitcoin. The transaction costs in Bitcoin are crazy high. Litecoin, they're nothing. Why? Because Litecoin was designed with higher transaction volumes involved in mind. It's kind of like Bitcoin 2.0. It's not. That's its only real advantage, but that's it. Things like Ethereum and others are they're different animals altogether. And if you're confused about those things, there's plenty of great stuff on the internet to explain the differences between Bitcoin, Ethereum, Monero, and others. Okay, so that's what I've got for this week, or at least for today. I'm going to try and get one of these done on Friday morning. I think should be interesting, or at least Friday, or possibly Friday afternoon. Y'all have a great holiday, and let's watch for a spike bottom here in gold. If we get a move in gold, I think that Monday's spike down on gold and silver may be your spike bottom for the week. And if you didn't buy that bottom, well, there may not be much upside left this week, but it's possible. I mean, there's still plenty of room to see if we get a bounce here off of $1,200/$16. All right, so and if you're still thinking about getting into Bitcoin, this week would be a good idea because this is looking to me like a setup for another 40% move to the upside. All right, you guys take care. Have a great holiday. We'll talk to you soon. Keep your stick on the ice.